Good morning, Fabian Onetti for Winston Capital Advisors. We're going to cover the week of October 8th through October 12th. We had a big correction in the markets. What caused it and what we think in Winston about it. We had a Hurricane Michael, a lot of discussions in Italy, some numbers for the week, and what is coming this week. We have a lot of earnings. So let's start with the market. It started basically with a correction in the bond markets. The yields went from 3 to 323. And on Monday, if you remember, we recommended to take, some assets, some investments off the table, especially equities, maybe 10% reduction, because rates, especially because of the jump, they will be, hitting the market, which indeed happened. We had the market for the week went down basically 4%. It recovered on Friday, so it was a little bit more than that. It was almost down 7% from the peak, almost giving, like in February, a lot of the gains for the year. What caused the correction? We think one was the rates going up. It's always an issue in the markets. Number two, the market is worried about the trade issues. As much as we fix or we have NAFTA and we have a progress with the European counterparts, the things with China get harder and harder. Vice President Pence spoke on the week about the situation with China, and some commentators thought that it's kind of similar to a Cold War in which China wants preeminence in the world and is now growing very rapidly, and we think and that's a confrontation that is not an easy one to fix, nor will we go away easy. So that scared the markets, and then to top it off, all these very controversial reports that apparently the Chinese intelligence services had inserted these chips in servers that ended up in the United States in places like Apple, Amazon, even the CIA, and that chip will allow to spy into the servers. Many of the companies have rejected the news, especially things like Apple and Amazon rejected that. However, a lot of semiconductors on the supply chain, on server production, especially in China, in the United States, went down, and that cannot trigger the market. What's our view? We think it's just a correction. We didn't like on Friday that everybody says, "Oh, the correction is over. We'll go back and rally again." Listen, the markets don't like to listen to everybody, so the markets will do what it wants to do. We don't think it's a big correction either, but we will stick with the leaders, the companies that so far have leading the year, the Microsofts, the Intels, the Apples, the Amazons. Stick to that. It's not a time now for try different things. Emerging markets been way too volatile, and Europe really has not really participated up or down. So stick to the winners, because if we are wrong, A, you will have more patience to wait for them because the companies that you like, and B, you can sell them quicker. You always have to think what happened if we're wrong. Let's jump into speaking about that, on the banks. A lot of people are talking about the banks. There was a Wood report on Barron's, but there's been a missing trade for a long, long time. The banks are down 5% for the year. We're down 5% for the week, 5.3. The S&P was down 4.1, and year to date, the banks are only up 1%. The S&P is up 3%. J.P. Morgan, Citi reported, and Wells Fargo reported on Friday. Some went up 1%, others went down 2%. They all reported kind of better than expected, good numbers. But the market thinks that the banks are very under leveraged. The returns are very weak, and they're not really doing a great job, despite raising rates and all this stuff. So looks like not the place to be for now. Let's jump into, we have Hurricane Michael hit on Wednesday, and now it's being confirmed it's been the strongest storm in the last 50 years in the United States as a strength of the storm. Not the most destructive, we don't know yet. The good news is that the northern panhandle in Florida is not a heavily, densely populated area, so it looks like the damage, although very big, is not as big as other historical hurricanes. In Italy, jumping into the other side, more discussion and comments and arguments about the budget and the confrontation with Brussels is not over. We will have more next in the coming weeks. We'll follow that. And then finally, the Atlanta Fed, which we follow, it keeps reporting that Q3 grew at around 4%. Most economists are at 3% or under. So we think that when the numbers come, it's going to be a lot of noise on that, because either way, the number will have to go either towards 4% or towards 3%, and the market is a big gap in bid-offer spread. We had inflation for the week. It was, benign, good numbers, a little bit weaker than expected here and there. So we think that will will pause, give us some pause to the